Hi, this is Randy Finney with Right Side of the Chart, and this is a early to mid-session update for Wednesday, February 26, 2025. It's 11:37 a.m. Eastern Time, and here's what I decided to do in this video. I was going to cover gold and some of the commodities yesterday. I told you that video ran a little long, so I would cap it, which I did. Let me do this instead. I've been going through, I got a flurry of alerts going off recently. So on this particular, I use many charting platforms, but on this one, I have price alert set, and you can see I can, go for the last couple days. You can see right there yesterday, a bunch of them fired off in 30 days. So let's just go through these in chronological order, with starting with the ones that fired off yesterday. And this is both going to give, I'm sharing both trade ideas. I'll highlight the key and actionable levels, and then also kind of give you a kind of overview on everything, the stock market, crypto. I've got gold in here. You can see GLD. So let's just start there. So I'm going to go through in this order. If I forget to mention, you can kind of glance right now. The first, I don't know, half dozen or over half dozen or yesterday, quite a few the day before. You can see the 24th down here. I hope you can see that. Either way, I'll go over these. It's going to move when I start clicking on the charts. I'm just going to move it to another monitor over here, click through these. Okay, so Bitcoin, I already updated that with you yesterday. I've been covering Bitcoin, the spot, the crypto itself, GBTC. Told you there was this trading range. I'm sorry, BTC, Bitcoin crypto. Now, GBTC is kind of now almost antiquated. It was the first to market ETF-like instrument. It's not exactly an ETF. It can trade at a discount or a premium to NAV. It's more like a closed-end fund. And but then, of course, when we get the approval, there were a proliferation of just a ton of ETFs came out. In fact, IBIT has been and still is an active trade on the site. But I've been charting this one for years. And the thing about it is I can go back longer term. We've been trading this one in Bitcoin trades. I have to say, are much, much more hits than misses, and caught some big tops and bottoms in this one. I'm not a crypto bug. I'm not a gold bug, but I'll challenge anybody's calls on crypto over the years, shorting the highs, covering the lows, catching good part of these trends. And that's what I do. I'm a swing trader, and it goes up, down, and catch not all of the trends, but try to catch the turns. That's what I like to do. And so again, by using this chart, I still follow it because it does track the price very well. And it also goes back longer in history. If you go to IBIT and any of the other ones that came out recently, all the actual ETFs, they got approved. They all kicked off in the beginning of 2024, so you can't chart that far. But you can see, you still have the key levels. And again, this is the one that's an active trade idea. As I mentioned yesterday, we hit my first target, so we're having a reaction. That's how it works. I list multiple targets because upon the initial tag each target, typically expect a reaction. Now, as the charts continue to develop, sometimes I'll give you my thoughts whether we're going to blow through a target or not, meaning not have a reaction. But as of now, that's it. So, but you can see again, to summarize Bitcoin, yeah, you had that big support shelf right there. And as I mentioned yesterday, any kickback to that level, even a little bit above, if they want to kind of run some of the stops, I'd give it a little bit of room and short up to, but not much above there. So let me go back to, again, my watch list. So there's GBTC daily chart. And what you can see is what I didn't show you yesterday on the actual crypto is a trend line that comes off the December. Or actually, this is when tech bottom. Remember, crypto is, if you're trading Bitcoin, you're trading the NASDAQ 100, you're trading NVIDIA, you're trading Apple. The correlation has been so strong, it's a complete risk off. Initially when it came out, the crypto heads, or whatever you call them, crypto bugs, I don't know what their nickname is. Their whole thing was, it's a play against the rigged system in the U.S., the markets, the financial system. And so when the dollar crashes and the economy goes to shit, Bitcoin will be there. Well, it's morphed into just a completely risk-on asset. And again, you can, here, you don't believe me, I'll show you. This is where the NASDAQ 100 bottomed right here in the beginning of December 2023. At the beginning of January 2023, you can see we have a same uptrend line. Now, crypto got ahead of itself. So if there is any predictive value, and I'm not saying there is, Crypto is broken down from that comparable trading range where QQQ hasn't. And QQQ is just under that trend line right now. So I remain bearish. I'm going to told you before, swing short positions, trend shorts. I'll be net short into NVIDIA earnings tonight, planning to add to and get very aggressive if and when we break the recent lows, the bottom of this trading range in QQQ. But now back to Bitcoin. So Bitcoin broke down below the range, but you can see on GBTC, which again has a good, we can go back longer than we can on those other ETFs. You have it at a very, very nice uptrend line. That's a very significant trend line. That was a major bear market low the beginning of 2023 for crypto and the NASDAQ 100, and launched this whole uptrend. So a little more downside. You'll also take out the 200-day moving averages, and you can see nice support here. So if you are either short, looking to get short, or if you're long and you're a crypto bull right now, the levels that if you're long, you don't want to see taken out, and if you're short, you do want to see taken out, is 64. So a long could put a stop somewhat under 64. Again, it was this all-time high here. We had a similar trading range. We broke to the downside and then finally regained it there. And as I often say, then when you have these trading ranges, once you have a breakdown on one side, if you re-enter it, from my experience, it's very bullish. In this case, this was a bearish breakdown below. You re-entered it, shot right up to the top, and then kept going. And that's, again, what I think is going to happen in the stock market here with the S&P punching out to the top of the range, failing. We've already had a quick, swift run down to the downside, as I showed you on QQQ. I just got out to you that NQ chart I posted to you last week when we failed back. I said, wait for the failure. That's a short entry there, and boom, we fell straight down. Hit my price target to the penny yesterday, as covered in that video. So we bounced, we were very oversold, and we're back to resistance. So for crypto, you want to see this trend line clearly get taken out. And like I say, the redder the better. And then also you have nice price support about 64. So you know what I'm going to do right now, because I don't believe I have it. Set another alert there. I may already have one. This right here is a measured target of the wedge. You take the widest part of a bearish rising wedge, which that's what this thing is, just a big old giant wedge. Remember, it goes all the way back to the left of the chart here to the January 2023 low. There's your divergence line. And so widest part of the wedge, you add it to where the wedge breaks down, and that would give your measured target. So that would take crypto down here, Bitcoin somewhere down, GBTC down to around that 3330 level. And again, I watch multiple charts. I watch spot Bitcoin futures, BRR. So yeah, I'm going to add a level right now because I can see there's a major reaction low there and a couple reactions there. That's what I should have had. So 39.50 would be my preferred swing target right now, with the potential down to 33. Just to measure it for you from the highs. That means crypto, if I'm right, we get there. Of course, we need the sell signals to increase my confidence that I'm right, increase my positioning. Otherwise, we could just bounce off this trend line. Remember, I always say an uptrend or support is support until unless broken. So once again, if you're a crypto bull, you can buy this pullback to trendline support. You can also buy a drop down to the 64 support. I wouldn't be buying it below that if I was bullish. I certainly add to a short if we take it out. So back to what I was saying, that would be a drop of about 53 down to about 61% if those two targets are hit right there. Okay, next up I had on the list was MS, Morgan Stanley. Recently I started warming up again to shorting highlighting the financials as short, objective shorts, and I'm finally seeing some cracks. This is an uptrend line. This forms a rising wedge, complete with my requisite, or preferred, I should say, negative divergence. And we broke down the other day. Again, you can see my alert. My alert was, I already had an alert before right here on the trend line break. And then again, I have that's about 128. It says 127.95. And I always check alerts. You break down intraday, but when you're hitting support, and remember the lows yesterday, as I showed you yesterday in yesterday's video, as well as in today's update, giving you the chart from even a week ago, we hit that support level to the button on NQ, ES. They all hit support at the lows yesterday. So this bounce is a reflexive oversold bounce off support, off price targets that were given. And so when you see this, when you see an intraday break, you don't immediately short. If anything, you cover and go long. Now, at this point in time, I have no position in Morgan Stanley. I'm just showing you what to watch here. Obviously, a solid break and or close below that 127.95 support, especially if we take out yesterday's lows. Once a reaction low, a pivot low is set, traders usually watch that. It was also, if you follow this line over right here, there's a big old gap right there. Bottom of the gap is there. So those are just what I call check marks. If and when that level's taken out, I'm trying to do a check mark here. The recent lows taken out, that gap. You can see all these are support, aka targets right there. And the 200 days. So at minimum, I'm calling Morgan Stanley back to the 200s, which is where, if you are a bull, this is where you buy it. Just turn off. I do this every day. If you're getting tired of it, don't, because if you're not taking advantage and trading, these key moving averages along with price supports, Fibonacci retracements, things, the more things you can incorporate into your trading, the more evidence you have, if you will, to go long or short a position. So, bulls buy pullbacks as they have. Once we took back the 200s there, it was an explosive pop through them, pop, back test. So, even if you're longer term bullish, you want to, if you get a pullback to the 200s, you buy it. Now, based on the divergences, everything else, long-term charts, economic indicators, market breadth indicators, sentiment, all this other good stuff. I think these things have a better chance of going sooner than later. So again, I'd like to see and wait position, add to a short position. If I take MS, I'll look at, of course, I may be in one of the financial ETFs, other stocks. I'm showing you this because it's one of the bigger ones and it matters. So if you look at these collectively, and again, that's why I do these videos. It shows you that I had a flurry of alerts going off. So some key levels were tested yesterday, and but also some key levels were recently broken down. That's a pretty key sell signal. That's just the bounce off my first support level. You can see it's not something I just added. I created that back on over a year ago, back in December. I'm sorry, December 23rd, 2024. And so that was the first support level. I expected a reaction. That's what we had. Looks to be potentially bear flagging here when you see an impulsive leg down, followed by a little kickback on declining volume. If we break down soon, let's just say hypothetically NVIDIA shits the bed tonight, market goes down, it's going to take everything with it, even if they have absolute no correlation or relationship. If NVIDIA really tanks, it's going to take the NASDAQ down, which will take the S&P down, which will take financials down, even though there are virtually no financials in the NASDAQ 100. It's mostly tech stocks. So that's one thing to look for. And then that bear flag would play out to that next target down there, 120, 121. And then it's going to also has the potential to roll over some things on the longer term weekly charts. All right, let me move on. I'm just going to kind of, by doing this, it gives you an idea what's out there, what to watch, what to trade. This is RJF. Again, this is the one of the alerts I had yesterday. I had a nice, clean, well-defined uptrend line there with nice, clean, and clear negative divergence, aka bearish rising wedge pattern, broke down here, zigzagging down. My alert fired on a break intraday. Again, intraday break, not one to take, one to cover, if anything, especially once 150.21 was regained. That's when the markets, the broad indexes hit support. And this is support too. Remember, this is a daily chart. My alert was not set on a 15-minute or 60-minute chart. All that ever matters if you're trading on a daily time frame is how that daily candle closes. So this was not even a whipsaw at all. It was a successful defensive support with just an intraday break to close back above it. And you can see, again, this is a line. It's not a randomly created line. I created that back in February 10th. So recently, I guess after the breakdown there, I put it in. So long before we hit it. We hit it on the 21st, almost to the button. Hit it again to the button. Yeah, to the button. Again on the following day. Yesterday, intraday Pierce. So this is what that's how technical analysis works. That was a support level identified well in advance. We hit it, and for 4 days, it's been acting as support. And now, as I like to say, support is support unless broken. So we could bounce more, we could not bounce. All I can tell you definitively is, if you want to buy it there, But based on the scope of this rising wedge pattern, it projects more downside. So I'm more apt to wait for a break below 150 and or yesterday's lows. And that's going to most likely take us down to the next stop. So here, I'll give you, if you want to trade it, just anytime I cover these stocks, if I don't have targets marked up, what I'm doing there is showing you, here's a gap right there, big old gap, top, bottom, traders, 200-day exponential, 200 simple. These are 10s out of 1 out of 10 targets. In other words, I put a high degree of confidence that if everything goes down, market goes down, financials go down, this is where you'll get the first reaction, and this is where you'll get the second reaction. And also, if you look at the measured target, again, widest part of the wedge, go from the top, take a trend line, go to the bottom, add it to there, comes in almost perfectly to my 137.58 target and the intersecting 200-day simple moving average. From the breakdown, that would be a total of about a 15% drop from where we're at today. It's still another 9% downside. RJF, again, is key financial stock. So let me continue on. SPY, pierced that. Look at that beautiful trend line off the October 15th. Remember, I just told you that the NASDAQ effectively bottomed in the beginning of January 2021. It had about a double bottom. The markets bottomed. The broad market bottomed in October, late October of 2023 here. And then this is where everything else. So that is the trend line right there, the key trend line, this purple trend line on SPY. And so here we are. We're heading into NVIDIA earnings. As I've been saying repeatedly, NVIDIA has the potential, and in my opinion, will most likely either make or break this market. If the market likes what it's selling, we have the potential to go to a new high. Potential. Again, any new high, it's only going to extend. If it happens soon, it will extend the divergence. So it's not a new high. I don't see us going 20, 30% up. Probably be another marginal. Or we could break down tomorrow. Just be, it's simple. Just set the alerts and react. If, we hold right now, all I can tell you factually and definitively is yesterday was a successful defense. We had an intraday pierce. It doesn't matter because of the daily chart, only to close right on the trend line. This is, again, a very significant uptrend line, multi-year uptrend line. We hit it yesterday, and again, we're right above it. So there's a greater risk, in other words, of breaking it tomorrow than breaking out to new highs. To break out to new highs from where we're at right now, we'd have to go up over 2.5%. To break down below that trend line, we only have to go down less than 1%. So that's the state of the markets right now. And these are levels to watch. And if I don't know if my alerts, sometimes I set them to reactivate. Either way, I'll be watching this. This is a SPY. I'm always watching SPY and QQQ. I don't need price alerts there. IWB, this is an important one. The iShares Russell 1000 Index Fund. The Russell 1000 represents the top 1,000 companies by market capitalization in the United States. So, the Dow, it just pains me to this day that I even talk about it on TV. It's such an antiquated index. 30 stocks is representative of absolutely nothing. Yeah, there's a correlation to the market because they are 30 big industrials, but come on, how representative of the entire U.S. stock market can 30 and all mega caps be? So this one does, it includes the top 1,000 companies. So they're the largest, but that's a much broader universe. You're going to get all sectors covered there, or most sectors, I should say. And anyway, so that's it. And the Russell 1000, by the way, comprises about 93% of the total market cap of all listed stocks in the U.S. equity market. So one to watch, guys. And why am I highlighting it? Because I got an alert yesterday. Saved by the bell, right? Breakdown, parked right back on it. And it's a beautiful trend line. I know I sometimes talk about charts like artwork. I'm not big into artwork, but I love charts. And this is just a nice, clean trend line. And there it is. Oh, and by the way, this one has a little work because there's the trading range. So 320.63. Obviously, the trend line is important. So a break of the trend line would be your first sell signal, especially a solid daily close below it. And then a break below 320.63, certainly a big one. Then you've got the 200-day moving averages, which are just above that 310-ish support right there, and so forth and so on. So there's your levels to watch. You can trade this one too. That's an ETF that tracks that index. So MSTR, I already covered that. We've been short that one since shortly after this bearish engulfing candle. I gave you an update yesterday, so not much more to cover. Hit the 200-day yesterday. Markets are bouncing today. So surprise, surprise, Bitcoin's bouncing. Surprise, surprise, MSTR is bouncing. I mean, this is, it's all related. Bitcoin follows the markets, risk on asset. MicroStrategy is chock full of Bitcoin, so it's going to trade with Bitcoin. So there's targets I still maintain. Again, I covered that yesterday, so no more time needed on that. SMCI did finally get their filing, but I think it is an objective short, and I shorted it today. Again, we had this, as I just shared it with you a couple days ago. We made 18% 3 days. I don't get a lot of comments on these. I don't know if people are trading these. Nailed the entry, nailed the exit there. It went down to that next target, really good support, a potential target, about $44. We were long here. We swung it up, hit the fourth target there. Watch, rinse, repeat. And now it's back testing. This trend line needs to be tweaked. I said it in pre-market. That's the trend line I have on the dailies. Comes off the recent lows, February 3rd low. Beautiful reaction there, breakdown, back test, TA 101. All right. And if you take it, set a stop according to your price target. I think this thing is going a whole lot lower because it follows NVIDIA. And my target's on NVIDIA. That's an official trade on the site now. We're still very profitable despite today's bounce. I'll probably get to it in a second if it's in my alert list or alert log here. But that's it. Simple stuff. Let me tweak that trend line and make it a little tighter. When I say tighter, I'm just coming in, catching the reaction. There's the low, catch that candle, catch the bottom of that candle, the body, and that's it. Back test there. And, you can either trade it as a reflexive, just pullback trade, or a tuck it away kind of, hey. Now, look, if you take this one today, if you short it today, and you're shorting as a swing trade, they don't report. They just finally got their financial statement in and avoided a delisting, or they would have been delisted from the NASDAQ. But they got that, so it rallied today, and it's back testing there. They don't report. I don't know. Oh, they were supposed to report on February. So I guess that's their report. I don't know. What I'm trying to tell you here is this is NVIDIA's sidekick. It tends to follow NVIDIA. So if NVIDIA gets clocked after earnings, this stock is almost certainly going lower. If NVIDIA rallies after earnings, this stock, good chance it's going to go up. And then the next levels that are resistance are where we shorted it the other day at that downtrend line, which would come in up here. We could continue to back test. There's a longer term uptrend line. I'll give updates on it. Either way, I just wanted to point out that that's it. And that was where we shorted off initially, the 60-minute chart. Okay, moving on. My next one in the list is gold. Told you I'd cover gold. That's kind of what brought me here today. I was going to update metals. I'm like, look, I can kind of give you a much broader overview of everything that's going on by just showing you my recent alert log, because I'm watching I always watch everything I watch. And I don't, by the way, I don't talk about everything every day. Like somebody asked me about oil today. I don't have a strong opinion on it right now or a position, but I gave them my charts, USO and CL. And there are things sometimes I take my eye off an obscure sector or commodity. So I'm not saying I catch everything all the time, and I welcome questions and feedback from you guys. If you see something, let me know. And then, so many of the trade ideas that I've had on this site and made money off personally, I've gotten from you guys saying, "Hey, Randy, what do you think? How does this look? I see something here, or do you see something?" I'm like, "Oh yeah, wow, that's a great chart." So keep that going. Gold. This is a 60-minute chart. There's a nice clean uptrend. Look at all these reactions. Boom, right on the trend line. And this is your negative divergence, 60-minute chart. And to boot, price support right there, or what I call the BOD, benefit of the doubt support level. It's about 266.30. That's where I have it, 266.30. So breaking the trend line, going to send us down. First target, 261.48. Next one, 257.65. And I can... So that's the technicals. That's the chart. Let's not overthink it. Sell signal, Yes, silver will go down. GDX will go down. I'll get to GDX in a second, even though it's not on the alert list. I just want to do an update there. It's related, closely related. Um, Fundamentally, if the market likes what Nvidia is selling, the market rallies. Maybe you get um, a sell off in gold, money moving out of gold to profit taken into tech stocks in the market, or it goes the other way. Maybe the market drops. I think gold, what I can tell you, I know gold's also been, instead of its usual or on and off risk off asset kind of flight to safety thing, it's been also a risk on trade. It's correlated with the stock market. Gold and the S&P both just made new all-time highs, right? So hard to argue that. And so therefore, by that logic, it tells me the same folks, we know that at any given point in time, especially in a bull market, the folks that are most heavily leveraged in their account and margin are bulls. They're long side traders. So it only stands to reason that if there's a swoon down, a pretty powerful move in the market that starts triggering margin calls, the same folks that are getting margin calls on their Nvidia and Apple and QQQ and all that stuff are going to get margin calls on gold because they're chock full of that too. All right, so either way, but that's kind of a fundamental kind of think through on it. The simple part is trade the charts. I'm going to break down, great. If it fails and go back above the trend line, you want to stop out. Don't overthink. If the divergences get taken away, stop out again. All right, I told you I'd hit GDX for you real quick. I did cover this recently back here, and I showed you a trend line that would trigger a sell signal, which was broken. I also told you we had a pending at the time, but it happened. Bullish, high level, pending bearish PPO crossover, and we were oversold to boot. And so we had the sell signal with the big red candle. We took out my trend line there, came down, hit my first target and first support. We're bouncing, and that's that. So again, if gold does break down, that's most likely going to bring GDX down to these lower support levels there. All right, next up was, and again, I'm just going in order of how these alerts were triggered here. QQQ, got it the other day right here. Breakdown of that yellow trend line comes again off the January lows, although technically it wasn't a low, but that's where it fits best. It was effectively a double bottom there. Comes in, catches that reaction low back from October 2023, late October. Had one brief violation there, right there on the August 5th lows. Didn't get us. In other words, that in fact it was the opposite. We were short right off here. We milked this thing down with impunity off the highs, covered the morning of that low, even below where you see the candle, because we covered in pre-market. It reversed and went hard long because we hit the 200-day moving average. So there's a great example of how I'm flexible. I'll look, see the trend line was taken out, but at the same time, so many stocks and sectors were hitting their key support levels and or their 200-day moving averages for the first time in a while. Again, I've been doing this a long time. Anything is possible, but it is extremely unlikely or improbable to see the NASDAQ so far above its 200 days after having not tested it for over almost a year, and then come down, drop all the way down 15% and keep going down through there like it's not even there. So that's why it was one of those rare, went from aggressively short to aggressively long in one fell swoop that morning, because it was just perfect support and very oversold, where at minimum you were going to get a reflexive bounce off there. And of course, we got a little more than just a reflexive bounce. It took us up to new highs. So anywho, that's but my point being is the only violation, I just spent about a minute explaining why that violation. And by the way, we reversed and closed right back on the trend line. So it wasn't even a sell signal. If you look at it that day, if I put my crosshairs there, it tells you we closed at 435.37, which was right there on the trend line. So what you're looking at is the intraday swoop down. Remember, we covered in the morning, shot way back up, closed on there. So that is, by the way, not a whipsaw, not a violation, because it's a daily chart. The top of the candle closed right back on the trend line. The next 3 days, 1, 2, 3, tested that trend line again, off to the races, came back, tested it again, tested it again, tested it again, broke down. This is why I putting odds, and hey, I'm going to be wrong a lot. That's the only guarantee I ever give you. I may be wrong on NVIDIA, but I'm seeing sell signals already triggering on NQ. NVIDIA's already been on a sell signal, peaked back a while ago. We had the weekly bearish engulfings. Now, NVIDIA certainly has the potential to make this breakdown that happened yesterday, and we're still below the trend line, a whipsaw. All that's going to matter is tomorrow's close. If we close way up here above there at 4 p.m., then this was a whipsaw. Anything that happens before then, even intraday, well, it doesn't really matter, at least not on this time frame. It may matter if you're short or if you're long, but so these are the levels I'll be watching for tomorrow. If again, because they report tonight after the close. So if we see this, look, if the market doesn't like what they're selling, they're probably going to take us right down to the bottom. That, remember, that's a key level, about I have it at 449.50, 499.50, I'm sorry. And again, that's the bottom of the big trading range in there. If you go down through there, you've got the 200s just below. QQQ has not tested the 200 since we covered our shorts and went long that morning on August 5th. It's been a while. So it will likely step in and buy it again. Even if there's an intraday break, but we'll see. Now, if they don't, you want to get out of Dodge. If we slice on through there and then Friday we keep going down, yeah. All right, we'll see what happens. Now it could go the other way, so let's just see what happens. Again, if you go heavy, short, or long into NVIDIA earnings, you're taking a big risk. But sometimes in trading, I always say you have to, take a side. If you don't know what you're doing or you're risk averse, go flat or market neutral. Hedge up if you have longs or shorts. If you have convictions on which way it's going to go, Carvana, rolled the dice. I figured which way it would go after earnings. Sometimes it pays off, sometimes it doesn't. Next up was BLK. BlackRock triggered give me a sell signal recently, an alert. BlackRock is obviously one of the big financial companies here. There's a beautiful uptrend line, clearly broken, but you can see I had support low. I'm going to add a line to this chart. Why? Because I should have, because there was a previous reaction low and we dipped below it there and we hit it the other day. And look, so now you have a confluence of support. First of all, a couple things. We have a sell signal the other day, breakdown, which is still very, very much intact. We're still well below there. I don't have to squint to see did we break that trend line. We broke it. But as I often say, this is what I call BOD of support. BOD, benefit of the doubt support level. There's a previous reaction low traders are going to look at. They stepped in and bought it, and we're still above it. When it goes, you still have the 200s. BlackRock, the last time it came and checked its 200s was back here. It was they were buying the 200 exponential, which is just below. So bottom line is, if you see, whether it's in 1 day, 1 week, you see a big red candle down here, you've taken out key price support, you've already taken out the trend line, then you've taken out the 200s. I don't see a whole lot stopping the stock till it gets down here, at least to 823. And just to quantify it, that would be a drop of 15%. BlackRock's not going down 15% without taking the financial sector down with it, most likely. All right, VTI. Again, if there is a single ETF that you want to say, I want to follow the stock market, I want to get a good idea of what's going on. I hear all this crazy divergence between the large mega caps, providing the majority of the gains for the stock market. This is your one size fits all. I've talked about this one over the years a lot of times. Vanguard total stock market ETF. Basically, it approximates 100% of the investable U.S. stock market and includes large, mid, small, and micro cap stocks that are regularly traded on the NYSE and NASDAQ. So this is the entire stock market. Much more accurate than trying to follow the Dow or anything like that. So, or even the S&P, which again, S&P is a great index, but it's the largest 500 companies, all mega cap stocks. They're not even large caps, they're mega caps. Then you have mid caps and you have small caps and micro caps below that. Boom, there's your trading range. We broke the trend line. That's why I had an alert. But again, is it an all-in moment? No, we hit support. We hit, like I showed you on the 60-minute charts, Nasdaq 100, S&P 500 yesterday, as I showed you in the video, and today again. We hit, this is a support level here, and we're right on the trend line. And we did break down, but again, you have to squint to see it. The candle closed. Where do we close? We closed. It doesn't matter. You can see we're close enough, and we're right on the trend line now. So I'm doing this video and I'm getting a little long-winded in them lately and covering a lot of charts because we're at, I believe, a potential key level in the market where it's do or die. This is nothing more right now than a pullback to a support, excellent support, phenomenal support. This is a key uptrend line from the October 2023 lows. So we either break it or rally off it again and keep the uptrend going. If you're a bull, this is what you do. You buy pullbacks to support. If you're a bear right now or bearish on this chart or a flexible trader like myself, I'm not a bull or bear on at any one point in time. I'm a bull or bear on something, but overall, whatever the charts say, this was a divergent high. You got a correction, shot across the bow, divergent high correction, divergent high correction. This is right here. That's most recent high. I just have to update my chart. DH4 or just DH, whatever you want to call it. But it's an extension of this divergence that's you can see it's been steepening. The divergence has been really building since this point. So it's a series of highs. And that shows better when you see this long divergence. Just go out to a weekly chart and it'll show a lot better. There, it can show like that all the way back here really too. But on the daily chart, you could even, if you wanted to, consider this standalone divergence. That's an ever so slightly incremental marginal move, or even equal high. It only has to be an equal high or higher high if the indicators are making lower highs. So that's what you have there. So, and that's what says, I'd say sooner than later, even if we get another hurrah, we're going to break that trend line. And when we break it, it's a very significant trend line. So that's not one of those active trader short setups I give you on the 15, 5-minute charts, 30-minute charts. This is a daily chart. This is your swing and trend traders time frame. That's a multi-year trend line. So if you break it, you're not going to drop 3-5%. You're going to drop double digits, and you see the levels. You got your 200 days. You got price support about 279. Next target after that, if that breaks, say in the 200s, you're going to go down here to 260.37. And I'm calling for a pullback of about 42% on the S&P 500 in the next drop, next trend change. When we get my sell signals that I've been talking about, 50% drop in the Nasdaq 100. So this guy should go down about in line with the S&P. That would give me, I'd have to go to a weekly chart. Should be, well, here, there's some longer term targets. There's a trend line there, 35%-ish. Yeah, no, right here, 170. I'm just going to write here for you. So 1 point, we'll go back in here and I'm going to say what's today, Feb 26, 226, 25 target, long-term target. So we know what that means. And we'll put that there. And there'll be, of course, plenty of stops along the way. That's what we use the daily chart for. And the 60-minute charts. All right, let me move on. Got a lot of them I want to cover. It's VTI, MSTR already covered. I'm just going, again, I'm cycling through this in order. Some of these have multiple alerts, different price levels that I've set. KCE, this is a big one. Capital Markets. If you don't know what that is, those are your companies like Morgan Stanley, which I already covered, Goldman Sachs, SPGI, that's S&P Global, Schwab, BlackRock, which I think I already covered, KKR, a lot of private equity firms, banks, brokerages in their exchanges. BX, look at that, beautiful chart. Look at this trend line, BX. This is Blackstone, boom, 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 all these support, boom, the 200 days. You can see how much, I hope you can see the red and the blue lines, how the 200 days come in right with this trend line. That's massive support. When it goes, it's going to be a powerful sell signal. You might get a minor hiccup right here. I would give you that as a first target. And then you have a secondary uptrend line coming in here. Either way, nice setup. And remember, a lot of these guys already peaked. This one put in not just a divergent high. See that little red red candle there? That's what we call bearish engulfing. It engulfed the entire candle, the previous candle. It came after an extended uptrend. As I've said many times over the years, those are some of my favorite short setups. They're super simple to identify and probably the easiest thing in the world to trade because you short. Just throw away the key with a stop above. Set your stop above because if the bearish engulfing's taken out, then it's no longer a topping stick. So you have very minimal upside or downside loss if stopped out compared to the upside potential. Had you shorted that bearish engulfing candle, so far you'd be up about 18% on your through yesterday's lows, 20%. Now, at support, 200 days, they're buying it. I would not in the slightest be surprised if we get another rally here. And if we do, the market's going up. There's a downtrend line. So where to? About right there. So we could easily see. And if you're bullish, I'm going to put it there. Now, again, we'll see what happens after NVIDIA. All I can tell you, whether we break down tomorrow or 6 months from now, that's still a very significant uptrend line. The 200 days, you cannot argue how important they are. Traders buy them in an uptrend. And then likewise, in a downtrend, they sell the 200s. Sell, rallies back to the 200s. Sell, rallies back to the 200s. Sell, rallies back to the 200s. Sell it until the downtrend ends and they're taken back, and then buy them, buy them, buy them, buy them. Got it? Simple stuff. All right, let's move on a little faster here. I was on KCE. Just that's kind of, I was showing you some of the companies in there and just how they all look so similar. They're very toppy and big downside when the turn comes. And the way I look at it, like if I get a sell signal in KCE, what I do is I go through these components, especially the top components that have the highest weighting. I'll go down to the top 10 or 20, and I want to see the majority of them having broken down. That's what I'm doing. I'm clicking on the component list. That's what, if you don't know what I'm doing with going through all these other companies. And so many of them just hit. Look at this, ARES, Aries. Boom, 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 boom. Look how many reactions on that trend line. We hit it yesterday. We hit the 200s, which also come in with that trend line. They keep buying. These are beautiful setups, guys. And again, if you're bullish or just a market agnostic trader, you could take, if NVIDIA wasn't coming out tonight, I'd probably share this and I'm sharing it now in the video. Look, a lot of times I pass on trades. I highlight as a good objective, long or short, and I don't take it, and they end up playing out. So, my job here is to just show you the setups, opportunities, and then you decide. And if you're bullish, you got to love that stock pulling back to the 200 and still just barely above them with a stop somewhat below. And again, if you're bearish, you got to love this setup, but you got to wait for the breakdown. That's it. Simple stuff, right? Fix that divergence line. Just update it. There you go. All right, all right, let me move on. Back to my list. Wells Fargo, another big bank, breakdown yesterday. And see, again, this is why I'm doing this. So many have recently broken down, but on the flip side, just as many stocks as I've covered in this video didn't break down, but they hit very key support levels. However, from my experience, when about half have already broken, let's just go with that number. Let's just say it's half, like Wells Fargo broke down, some of these I showed you. From my experience, those aren't going to be whipsaws. When you get that many, the rest are just lagging behind. They just hit their support. They will break down. If one or two out of a dozen or 2 dozen break down, I've seen that quite often, then that has a good chance to be a whipsaw if the rest of those stocks hit and bounce off their support levels or their uptrend lines. But when roughly half of them have broken down, there's a good shot the rest are going to give way soon, especially if these guys cannot recover, like Wells Fargo cannot get back above that trend line. So there it is for you. You could see, first target, second target, so forth, so on. 200 days. Its stock needs to come visit its 200 days. It hasn't visited them in a while. So just to come in and test them again is going to cause, take about a 15% drop. MS, I might have covered already. Again, I'm just clicking through these guys in order. Hood, Robin Hood. I highlighted this one recently. And boom, there's the breakdown well below the trend line and my 52.81 price resistance. And you can see these targets, 200 day. That's something, I wouldn't even, I'll be honest with you, I wouldn't even try to game this first target here. I'm going to even move it higher. That's where it should be. I should have had it there because I had reaction highs here, and that's where we bounced. We already hit it. I wouldn't even, if you were to short this one, either here or on a back test of 52.81 or that level, I would just hold out. I'm just telling you what I would do. Hold out for a move and cover just above 33.79, which comes in with the 200-day exponential moving average right there. That's going to be a drop of about 32%. Nice trade there. Yeah, one of my favorites. And I might even actually add that one to my lineup. Don't want to add too much shorts, too many more shorts before NVIDIA reports. But like I said, I will probably not be getting a lot of posts out in the morning. Well, we'll see. I'll most likely be adjusting positions tomorrow morning, one way or another, whether NVIDIA goes up or down after earnings. In other words, either adding shorts pretty aggressively or reducing shorts. Again, I never go in with too much to hurt me. I know NVIDIA. I know its history of gaps. If the damn thing went up tomorrow 20%, it would not surprise me in the least. If it dropped 20%, it wouldn't surprise me in the least. A 20% move in NVIDIA is going to do big things to the stock market. So again, one thing I try to do with this site and this service is share, the experiences that, I've learned, and a lot of them have been very costly lessons over the years. Know your stock, know what's going on in the markets, know what economic reports or Fed meeting or earnings can move the market. So you might think, it doesn't matter, Randy, I don't have any position in NVIDIA. If you've got stocks, you have exposure to NVIDIA. I promise you that. If they're U.S. listed stocks and anything but micro caps and penny stocks and other things like that, they're going to move with NVIDIA. That's just another one here. All right, let me continue on. BAC, Bank of America. This one, look, here's one of your biggest banks right here. World's biggest banks, one of the country's biggest banks. Beautiful trend line right there. Look at that trend line. So many clean reactions. November 23. Reactions. Boom, breakdown. That is a sell signal, my friends. You don't have to squint to see it if that stock broke down. Coming up on the first target/support and 200 days. If they go, that will significantly, in my opinion, increase the odds this stock has started a new primary downtrend, i.e. bear market, and not just a correction. Right now, it's only a correction. I don't care if it's more than 10%. It's coming right up on the 10% mark. And that's great support. So if you're a Bank of America bull, here's your level right there. 200-day exponential and simple come in together right around the 42.74 support. So a bull will want to step in and buy that level. A bear will want to wait for that level to break. And whether you want to short Bank of America, short XLF, or BKX, any of there's ETFs that track the banks or financials as a whole. All right, where am I at? 47 minutes. I should wrap up quick. That's it. I'm just going to rifle through the rest. American Express broke down, coming up on my first support level. Additional targets there. I think I've shared this one with you before. What if I have the targets? Amazon got an alert yesterday below this trend line, but actually the level might have been below this. This is right here. Key former support. Let me repeat that. Former support. Support once broken, which it was the last 2 days. We broke it the day before and then again yesterday. We're back testing. And we're back testing the trend line. And that comes off that divergent high and that sell signal there on the bearish rising wedge I gave you. This is an objective short right here. Again, it's going to move with NVIDIA. There's a downtrend line. If it hits that would also be an objective short entry. Anything more than that, if it breaks out above there, that would be bullish. That I have a stop loss somewhere over there, right, not too far above there. NVIDIA, I've covered that in quite a bit. It's an active trade. We shorted it right here recently. Hit the 200s. They have to. It's just what bulls do in a bull market. They buy the 200s, but this is weakness. The 200s, it should have been off to the races after that. Deep, steep gap, whatever. You know my thoughts. You know my long-term targets. If you're in this one, T4 is still my final target, so I see a lot of downside. And we should know. We should have an idea in the next couple days here, depending on what happens after earnings. RJF, Raymond James, look at that beautiful trend line break. Measured target. I must have already covered that one. KKR. I don't know if I covered it. Another private equity. Texas Roadhouse. I've been covered the restaurants back here quite a bit. EATZ is ETF. A lot of those restaurants continue to move lower. I'm longer term bearish on those. LITOF, I had an alert go off on February 10th right here, break of this trend line. I believe I shared this one a couple months back in a video, and it's already up 34% since there. Wish I could tell you I took that one. I did not. If I checked it that day, I don't know what was going on, but either way, it's in my alert list, and Again, one I would have, I believe, covered in the video back when I covered the lithium stocks. I think it was last fall. A lot of those were setting up big divergent low and so forth. Amazon I already covered. LEA broke out recently. Auto parts, I don't like the follow-up after that. SOXX, covered this forever and a day. It's a long-term swing short. That is the level that still needs to go. That red line I've had here for weeks or months now, 209.55. You can see we're just dancing on it. And NVIDIA will make or break this tomorrow. So if NVIDIA poops the bed, we go down. If NVIDIA rallies, we hold that support. It's still got plenty of resistance overhead. Not to mention we're still below the primary uptrend line. We had a breakdown back test. It's just holding here because NVIDIA refuses to completely roll over. Again, NVIDIA topped months ago, but it's not really going down a whole lot, nor is the stock market. So that's why you have the same kind of sideways trading range there. So set an alert. I think I already have one. I'll be watching the semis. That's it. Yep, that's my last 30 days, guys. Good. I got it all. It took 50 minutes. Remember, when you watch these videos, if 50 minutes is too long for you, increase the playback speed. Go to the bottom right corner. Hit the settings icon. You can do 1.25, 1.5, 1.75, whatever your thing is. And you can also slide the slider on the bottom, the time slider, and see which chart is being talked about. If I'm on something and I'm rambling on, you don't care about SOXX, you want to move on to the next one, you can do that too. All right, I'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.